Infratech, cement.
Okay, thanks so much for that, Sharad. Those leadership changes having an impact. But just a quick look at the market, whether we're holding on to gains or not, because it's been a topsy-turvy ride of late. Today, there was largely a bit of a, kind of a semblance around the 23,150 mark, and that's exactly where we've managed to be at right now. Public sector banks, those select ones on news are up. You also have Adani Power doing well, Olectra, Green Tech, JBM Auto. Some of these, commercial EV players are also doing well, and Mazgaon Dock has been holding on to decent amount of gains. On the losing side, it's HCL Tech, which is down 8%, LTI Mindtree 5% lower, L&T Tech down about 3%. Ajay, we've got two earnings so far, very divergent kind of reactions coming in. TCS was up 6% post its earnings. HCL Tech is down 8% post its earnings. The likes of, LTI Mindtree, L&T Tech, at least for now from the stock moves, are reacting negatively, perhaps speaking in a weak set. How should one play the IT pack right now?
IT is a buy. IT is very much a buy. I think we bottomed out on IT about a quarter back. Earnings were expected to be weak because of the seasonality factor. What the market was looking at was the order books and the flow of large orders. And that was a good good news came in with Accenture and with TCS, both in terms of bulging order books. And finally, the digitization strategy, the cloud strategy, starting to take wing. And the AI, portions are starting to kick in. That was the expectation. Now, company by company, I would not like to comment, but I would say the sector stays one of the better sectors to own this year and in future, and we have probably gone through the worst. The US economy is doing well. The order flows are good from both BFSI as well as manufacturing. In the US retail, we have to wait and watch. More clarity will come over the next 15 days as more US earnings will come in. But US banks are going to have a blockbuster quarter, and you can expect more IT spends from US banks, and Indian IT will benefit from that as well. And more, I would be, very selective on IT in terms of maybe 3-4 companies at the top end, and mostly in the mid-tier IT. That's where you will really see the growth and outperformance coming in.
Ajay, wanted to analyze the market crash as well with you. And yes, we're calling it crash. We've already fallen at an index level itself about 10%, and more so, of course, for individual names within small and mid caps. Do you think the buying opportunity has come, or one can look at least nibbling in as of now?
I think we can wait out, Aisha, because, the issues are more global. And today we saw, the Bloomberg story came in that the incoming Trump administration might look at calibrated, gradual tariffs. And we saw Asian markets recovering, even US futures going up. So trade policy has become very center of plate. I think no harm in waiting out 2 weeks and seeing how things pan out. The normal SIP flows, definitely, those should be put. But I would say right now, caution. We have too much in terms of event flow, biggest being Trump coming in next Monday, and there will be 10-15 executive orders being passed. So how does that go through? This week, you will see the Trump appointees standing in front of the Senate. So we'll have to wait and watch if especially the Secretary of Treasury and the Secretary of State get through the Senate committees and get approved. I think that will be critical for the markets. US CPI, not much move expected there, 0.3% year on year, month on month. Core will stay at about 3.3. Markets have factored that in. I hope it stays at that. If it is even slightly higher, you could see one more sell-off in the US markets, and that will bring in global sell-off. So higher global yields, stronger US dollar, higher US Treasury yields, Trump coming in, meaning tariffs, meaning higher borrowing by the US government, and the Fed not being able to cut rates as fast as the market had earlier anticipated. Maybe conflict between Trump and Fed being set up over the next 2 months. So those are the global big factors. Domestically, we have the budget and the RBI MPC meeting. The monetary space has become less for RBI to cut. Unfortunately, the October or December opportunities were not grabbed. Those were easier days to have cut the rates. Now with the rupee tanking the way it's going down, I don't know what the situation will be, but you need some counter-cyclical monetary action, and a rate cut would be more.
Sure. The rate
Most
cuts. Sorry, we've got you on a bit of a patchy line. We'll try and reconnect, but the verdict seems to be that the rate cut cycle is not going to be as sharp or as deep as the street was factoring in, neither in India nor in US, especially in India with the rupee weakness. One will have to factor that in, plus growth being a bit of a challenge. So we'll have to watch out for that. But separately, all of these Adani group of companies are doing very well today. Ajay, any view on any of these names from the Adani pack?
No, I think it's a relief rally, more of a relief rally on Trump coming in and less regulations in the US, and hopefully Trump as a friend of India or a friend of Indian business or a pro-Indian business. But more than that, very difficult to say. These kind of moves are very difficult to really analyze or project. So mostly the word on the street is that there is hope with Trump, and a lot of this kite flying that was happening with the Democrats, that might get put to rest. So that's the big hope that's driving.
I just wanted to analyze whether the market would have the same set of leaders as we did before this correction transpired in the market. So do you sense that it's more the bottom-up stories where there is valuation comfort? They are the ones which are going to peg higher. And let's just talk about the large cap universe right now.
Aisha, what I think will outperform public sector banks will have very good results. So yes, I would say it is a bottom-up stock pickers market. The macro top-down people will not outperform in this kind of a market, because when you have had 9 years of very strong markets, now is a time for a pause probably this year. We were a little contra to it. We felt that the US market will continue to do some heavy lifting and carry this forward. But the way US yields have gone, and then the global yields have gone with that. Second, the strength in the dollar. So the US Treasury has allowed the dollar to strengthen so much. There has not been any calls to other central banks, any coordinated efforts to calm down the dollar. The dollar is hurting the global economy, and that will be an issue. So overall, excuse me. Overall, I would say that the issues remain on the global front. Really, the big challenge is global. Domestically, we'll be able to address. So it was a question of 4 months of very slow spending by the government. Second, RBI being hyper hawkish when they should have injected given some boost to the slowing economy. Those indicators were already showing up by July, August itself, that everything is not good with the economy, especially aggregate demand is going down. I think RBI missed a couple of quarters of action, and we are paying the price now with tight liquidity and too high rates. And even now, Aisha, if it is cut, the rate is cut, it takes 9 to 12 months to really impact the economy. That is the trouble with monetary policy. So now fiscal policy has to do heavy lifting, but the government had chosen a fiscal glide path where they would have reduced the fiscal deficit.
Okay, point taken. So that's a view coming in as far as some of these, thoughts around fiscal deficits, the way forward, consumption and all of that is concerned. But as we're starting off 2025, it's been a volatile ride in the first 15 days itself. But how's the year likely to pan out, and which are the themes to watch out for? Let's hear out from top market voices as to what they are watching out for in 2025.
I'm constructive on the utility space, very constructive on power space till 2030, 32. That's the area which I will like to give. FMCG has potential to come back. Staples have to come back. Given the government stress on this space, we expect some amount of if I not say freebies in that sense, but it's some amount of soft corner is there that money will shift from larger infra projects to some of these schemes. So that's the one area of concern, and plus crop has been very good. Rural economy is coming back after 4 years, so we are constructive on FMCG space.
Travel and tourism continues to be strong. It's been great for the past 2 years. Real estate, I think, has still a couple of more years of legs left in them. And my view is that as we get closer to a 5-year cycle of the real estate sector of real estate development, where people will actually get keys and move into their apartments, you will see a big spurt coming in everything that a new home needs.
No better place to invest in, to my mind, than the financials, which would probably lead the next rally. Other than this, the dollar rupee move, which I think is on a near permanent basis in that sense, will benefit pharma in a big way. Even the IT space could benefit because part of it, the gains will get passed on to the end consumers, but the IT space could also benefit from the tailwinds here. Other than that, the India manufacturing story, the India PLI story are themes which in the central space along with financials will continue to be the place where money could come in.
This whole manufacturing, this whole industrialization, this whole investment in the power capex is a real story. See, we are seeing it globally. The demand for power and infrastructure rollout has improved significantly, and outside China, not many countries had invested in the space for last 10 years. So I think that's something one would like to buy on everyday clients.
Okay, that's the take coming in on where there is value in the market. For now, of course, it's the Adani group of names which are leading. There's a BEL which has seen quite a bit of uptake of about almost 4% or so. There's Shriram holding up almost about 4%. And PSBs, like Ajay was just highlighting, SBI leading the charge, a good 2.5% higher there as well. There's of course Tata Motors, Hero MotoCorp, Maruti, M&M. They are the ones which are also looking up as we speak right now. Ajay, what about autos? Do you think the hay gains are already made, or do you sense that there's still money to be made from at least the erstwhile leaders, your likes of M&M and Bajaj Auto?
Yeah, I think passenger vehicles will do better. Two-wheelers have been disappointing. Tractors and passenger vehicles are on the recovery path. Commercial vehicles still not doing well, and two-wheelers are still challenged. Again, a question of demand. So if you see a big rural allocation in the budget, then you will see two-wheelers running up and trucks running up. But overall, I think passenger vehicles and tractors is the place to play autos, and of course the auto ancillaries, tire companies. But the European part is very challenged. Now the calculations are showing that they need to put something like 50% tariffs on the Chinese to be competitive to Chinese automakers, given the scales and the government subsidies that the Chinese automakers are enjoying. That's the kind of competitive tariff that European automakers need. So not very good situation for our auto ancillary suppliers into the European auto market as such. So one has to be careful on that. It's not a sector that you can give a sector call. I would say more domestically focused passenger vehicles and the tractor segment, there is some amount of recalibration happening after a number of years of underperformance. So these two will do better.
Taken. In the meantime, you have New India Assurance, which has managed to suddenly perk up quite a bit. So some of these insurance companies are in focus. So at the highest point of the day, 11% higher on that one. On the losing side, KFin Technologies, United Spirits, and some of the real estate names. Ajay, what's the sense on real estate? Do you think the cycle has peaked both for the sector in terms of fundamentals as well as the stock price?
I think stock prices ran up much faster than the fundamentals. And if you were watching the commentaries last year, the problem that real estate majors were really facing was approvals and new projects kicking off. So whoever had the earlier problem used to be liquidity. That has got solved because a lot of the weaker hands have got wiped out. And with RERA there, only the strong hands are there, and most of them are now in the listed space, so they can raise money quite easily. So the liquidity issue has gone. Excuse me. The real estate turnaround has started about 3 years back, and it's normally a 10 to 13-year cycle. So this is more a blip in a bigger structural cycle. I would say the stocks had run up too fast. The real estate sector will do well. Stocks will take time to digest their run up, and then they will again start rallying. So watch out for more project announcements, and who has got, in accounting terms, who's going to recognize more revenue. So a little bit of hard work will need to be done in recognizing the winners in the real estate pack.
So good having you on the show. Thank you so much for taking the time out and speaking with us. I'm going to